gas prices. They were cut to $4.2 per MMBTU, the administered price that is. Expectedly so, because global gas prices and the benchmarks to which the Indian administered price is linked have been falling, and that has meant, of course, lower prices for city gas as well. Vivek Jain, the Associate Director Corporates at India Ratings and Research, joins us on this issue. Vivek, first up, who would be the beneficiaries? I mean, we know who lose, the guys who produce the gas, but is this a significant positive for instance, fertilizer companies?
Yes, hi Lata. So obviously we believe it's a positive for the end consumer industries, not just fertilizers, it's also positive for the power sector. It's also positive for the city gas distribution entities, as we expect the prices in the CNG segment and the PNG segment to decline. So yes, it's a positive for the end consumer industries.
Okay. Can you quantify for us how much of a positive it could be for some of these city gas distributors, some of these names like say an IGL or even a Gujarat Gas?
Right. So we believe the prices on the PNG side in Delhi at least could go down between a range of 2.1 to 2.3 rupees per SCM. And for the CNG segment, the prices could decline by 2.7 to 3 rupees per kg. So that's the decline we are looking at. And if IGL were to take this decline, then probably the volumes in these two segments can see a pickup, because we are expecting the conversion of private vehicles from diesel to CNG to increase. And secondly, on the PNG side, I think on the domestic side, the penetration of that particular fuel could increase, because earlier it was roughly about 5 to 10% more expensive compared to your subsidized domestic LPG cylinder. And now that premium will go away and it will be slightly cheaper as compared to the cylinders.
Okay. Mr. Kapil, Mehan is also with us. So Vivek, just stay on for a tad bit. Mr. Mehan, this will be a big positive for a company like you, the fact that, gas prices have been cut. But can you tell us how much of your total input costs comes from domestic gas, and how much of a positive impact this could be for you?
Yeah, see, now that the gas pooling arrangement is in place, so it will be averaged out with the imported RLNG, which is coming under the long-term contract, as well as being bought at spot. But little over 60% of gas to fertilizer industry comes from domestic sources. So on a rough basis, it will have an impact of about 60 cents per MMBTU of gas that comes to the industry, and that translates to, close to about 1,000 rupees per ton reduction in the total input cost.
Okay, and that would mean what? Lower working capital? What will it mean in terms of a net impact for you?
It's a pass-through under the subsidy scheme, so it won't have any impact as far as our margin is concerned, but interest costs, it will have a positive impact, because our total subsidy bill comes down to that an extent, and our cash flow for buying raw materials, etc., also comes down to that an extent. So in that sense, it's I would say a marginal positive for the industry, as well as for Zuari Agrochemicals and Mangalore Chemicals.
Okay. Kapil, what about the, Vivek, what about some of these names like ONGC and, Oil India? What kind of an impact do you see in terms of revenues for them? How much do you think it will decline?
See, if we assume the same volumes that they did, then probably in H2 FY16, we are looking at an impact of roughly 11 to 11.5 billion for ONGC on the revenue front, given the decline in the prices, and an impact of 1.2 to 1.3 billion for Oil India. And for GAIL, we are estimating an impact of 16 to 18 billion on the revenues. But GAIL is protected on the margins, just the impact will be on the revenues. But for the other two, it will also translate to an impact on the profitability.
And is there any impact on Petronet LNG?
The Petronet, I would not say would, so whatever consumers are using the imported LNG, so they would continue to use, since the domestic gas allocation is, availability and is low. So imported LNG,
there's no question of competition
should not be particularly impacted.
So there's no question of competition from domestic or domestic gas users at all, since it is rationed out?
Yes.
Okay. So Mr.
I would say that, yes.
Sure. Mr. Mehan, just to understand this correctly, although there will be 1,000 rupees per ton positive impact on the input prices, because it's a pass-through, there won't be any impact on the margins, not just for you, but for the entire industry, correct?
That's right.
Okay, but given the longer-term trends in gas prices, Mr. Mehan, does this improve the longer-term profitability of private sector fertilizer companies?
Yeah, definitely it does improve because, in the very long run, I think this will have a positive impact on the new investments that are being talked about, the new projects that are being talked about by the industry. So this definitely is a positive step, and in line with these prices, the international price also has come down because there is a substantial amount of spot gas which is being purchased by India, which goes into the basket of gas which is available to the urea industry. So that coming down, we have seen that despite rupee depreciating, the average price month on month since the introduction of gas pooling has been coming down, albeit slowly, but this will, I think, bring down the price below 600 rupees per MMBTU.
Oh. No, I was looking even more long term. Are you looking at more pipelines being laid in the Asian theatre, in the Asian sector, and therefore maybe in a couple of years gas prices falling more sharply simply because of greater availability in the Asian, from Australia, from Qatar?
Yeah, definitely. I think Petronet LNG's terminal in Cochin is ready for close to 2 years, and that is not being used because the pipeline is not yet ready. And we are now told that there are some developments on that account. And if that pipeline work starts, I think in 12 months' time, we are told that pipeline will be ready, and that would mean almost 20 MMSMD of gas additional availability in the to the Indian market, and that also in the new markets of South India, of the West Coast. And this pipeline, when it gets connected to the Bangalore, the whole pipeline, I think that will definitely, create a larger market as well as larger competition in the market.
Okay. Vivek, we've discussed the impact, negative impact on ONGC and Oil India and the positive impact on some of these city gas distributors. But I heard you mention that even a lot of these power players in the power sector will benefit from this. Which are the listed names that could have a positive impact, and have you done any number crunching on that?
It would be difficult to give out specific names, so I'll refrain from that.
Okay. But overall for the industry?
But overall I can, yes, for the industry I think if you assume the same volumes being supplied, so roughly 41 billion was generated through gas-based power plants, and we estimate the cost of generation for gas-based power plants to decline from 2.91 per kilowatt hour to 2.41. So that's a 50 paisa delta you have. So that will translate to roughly 15 to 16 billion of annual savings for the gas-based power plants. At an all-India level, this will roughly translate to 1 to 1.5 paisa per kilowatt hour at an all-India level.
Okay. Well, just a last word from you, Mr. Mehan. You all swung from loss to profit in the previous quarter. How are the next few quarters looking? Will you now start looking at even capex?
Yeah, we have ongoing capex programs, but because of rupee depreciation, I think overall the impact on fertilizer, especially our company's profitability will not be, very positive because rupee has declined, and the price levels in India have not gone up because of easy availability of fertilizers. So I think overall it's a challenging environment at the moment. But on urea front, yes, there are positive developments.
All right, we leave it at that. Mr. Mehan and Vivek, thank you so much for joining us and giving us all the details on who are the companies